Hello and welcome to the YouTube and Discord channels of Bookmap to our monthly English live webinar. My name is Oliver Sperring. I am a professional trader since 13 years now and also the CEO of the Sperring Academy based here in Dubai. We are offering educational programs as well as online courses in terms of investment and also swing and day trading. Before we start our live webinar, let me please share my screen to show you a quick disclaimer, at least in case I find it. There we go. Everything I'm going to tell you today and everything I'm going to talk about today is for educational purposes only. Trading, and especially trading the futures markets, is connected to a higher risk, and therefore we assume that everybody of you knows what you're doing and is aware of this risk in case you plan to click on a buy or sell button today. All right, so what are we gonna do today? Let me just share Bookmap here. What's the plan for this session today? First of all, I am going to show you one of the screen recordings of one of my trades that I recently did. I usually screen record each and every one of my live trades so that I can show them later to my clients within the day trading education. And one of those trades I usually take and like to show them to you guys. I'm gonna show you how I use the software Bookmap to find trading possibilities, to actually open my trades, to manage my trades, and hopefully to finish them with a win. After the review of the live trade, we're gonna go on with some of your questions that reached us during the last month. Also, this is supposed to be an interactive webinar, so if you've got any questions, please feel free to use the chat function of YouTube or also of Discord, no matter where you're watching us at the moment. Please feel free to ask anything about trading, about using the software Bookmap, about the functionality. I'm going to give my best to answer every one of your questions. Also, if you're not live with us, but actually are watching the recording of this session right now, please feel free to use the comment section to post your questions, or you can also send us your questions to mail@sparring-academy.com. We're going to collect everything, and in case you're not live at the moment, we're going to answer them in one of the next sessions. After that, we're going to go on with a short market analysis in the ES future. We're going to use the volume and market profile to find some good locations where good possibilities could occur within the American trading session. It's just gonna be a very basic analysis. I'm gonna show you some very basic levels that each and everyone should know. Each and everyone should, just paint into their charts on a daily basis. And as you can see, you don't have to have a lot of market knowledge to actually use these levels to find good trading opportunities on a daily basis. After that, we're going to jump right into Bookmap to have a look at the US market opening. We're going to see in which phase the market is currently in. We're going to take a look at the trend. We're going to take a look at the liquidity imbalance and hopefully find some good trading opportunities to later trade within the session. All right, without further ado, let's jump right into it. You can see my screen. Yes, you can see my screen. So just to say that again, what you're seeing now is not a live trade. This is a screen recording of one of the trades that I recently did. I think it's from the last week. Let me just check here. It's from the 15th of April. And I always see and look if I can find some trade recordings where I can actually show you guys something, talk a bit about certain opportunities, about certain situations. So hopefully you will find some value in this and include some of my theories and trading principles in your own trading style and strategies too. So, to the basic situation, what are we seeing here? On the left side of the window, you can see a absolutely usual and common 5-minute candlestick chart, and on the right side, you can see the software Bookmap. Within the candlestick chart, you can see certain areas that I marked with different colors. I do a market analysis at, well, it's 8 a.m. German time, so it should be around 2 a.m. Eastern Standard Time, in the middle of the night for you guys. I'm doing this together with my clients in the day trading educational program, and we're defining certain areas within the chart where we are actually looking for trading opportunities. Those levels are based on several different factors. We are using market and volume profiles. We are seeing where liquidity lies today. We are having a look at where liquidity was the day before. We're including dealer hedging levels like gamma levels. We're including Vanna and Charm. We're using dark pool conceptions. We're having a look at certain VWAPs and anchored VWAPs, and we're combining all these principles to make a very powerful market analysis with levels where we can find good trading opportunities on a daily basis. So, as you can see, the market started into the US session by ranging a bit in the first minutes, and then we had this bigger sell-off right into this purple colored level. This is no magic. The purple colored level is simply the closing price of yesterday's daily VWAP, not more, not less. You can also see this red line. This red line is it's an anchored VWAP of a higher time frame. So this is a level where I expected the market to make a pullback and where I expected the sellers of the last downtrend to close their positions by buying. So this level is validated by the yesterday's VWAP closing price as well as the anchored VWAP from the higher time frame. So this is a certain price location where I personally expected the buyers to enter the market and to see a reversal. This does not mean, and this is very important, this does not mean that I simply put a limit buy order to this level and just hope for the best. This is not how this works. In my trading strategy and my trading style, I always want to answer two questions: the where and the what. Where should it happen and what should happen there? So first thing that is always the fundamental basic of everything is the where. So where should it happen? This question is answered by our market analysis. This is answered by the levels that I paint into the chart in the frame of my market analysis on the morning. So the question where is answered here. The second question is what should happen there. And this is where actually Bookmap comes into play. So what we are watching on these kind of certain price locations is the magical order flow. So we are having a look at certain objective factors that the market shows us to interpret them and to hopefully find a trading opportunity that is actually validated by the order flow. What we're doing here is having a look at 5 different factors. What are the passive market participants doing? What are the active market participants doing? How is the speed of the market or the speed of the auction changing and adapting to the new position? Do we see any order flow signals like stop runs, exhaustion runs, absorption, iceberg orders, things like that. And last but not least, what is the price action doing? Those are the 5 factors. And what I always tell my clients, without diving too deep into these conceptions, what I always tell my clients is, before you enter a trade, before you either click on the buy or sell button, always just have a look at the situation, have a look at Bookmap, and just go through these 5 different points. You don't have to find a certain answer to every one of these points. This is not how the markets work. There's never the perfect situation where just everything comes into play. But just have a thought on every one of these 5 different factors. What are the passive market participants doing? Can I see pulling? Can I see stacking? Where is the liquidity? How does the liquidity change when my price location is reached? So what are the passive market participants doing? Point number 2 is, what are the active market participants doing? So do I see market selling? Do I see market buying? Can I see a certain change in delta? This is where Bookmap is really a great software to have a look at this. You certainly know the usual delta or delta unwind indicators of common trading or charting softwares, where Bookmap has these very, very practical bubbles. I know it's a very simple conception, but it's so powerful. You're certainly not used to my colors here. Probably most of you will simply have green and red colors. Where you see green on your charts, you will see white bubbles in my chart, and my red bubbles are teal colored. So this is my personal company branding. So those are the colors that I'm simply used to and that I like to use. So whenever I see a bunch of teal colored bubbles, I do see strong market sellers. Whenever the price approaches one of my levels and I see a very distinctive change in these colors from teal to white, I know that there has been some kind of change in the delta. It may be a simple delta unwind, but it can also be a point in which market buyers take over the situation. So we only know that when the price usually has already gone too far. But nevertheless, this change in delta is one of many factors that we can have a look at those kind of certain price locations, and that we can use ourselves and in the interpretation of the situation here. So what are the active market participants doing? Point number 3 is market speed and auction speed, which are actually 2 different things. Whenever we approach one of those levels where we expect a shift in market direction, what we want to see first is speed in the market. There won't be any kind of reversal without first an increasing speed in the market and in the auction. So what we usually are seeing is that the market approaches one of the levels, the speed turns up, and we see some kind of stop runs, absorption, whatever, and then the market tends to run sideways on those levels, speed comes down again, and as soon as the other side, the other active market participants take over, we see an increasing speed again. So this is just a basic concept, but it's important to see. Then the other 2 things were, of course, order flow events like stop runs. It's always good to see some good old stops being taken out before a market can reverse. Of course, in case or to actually analyze those kinds of stop runs, you need MBO data. So it's good to have either the MBO package by Bookmap, which is a great value for every retail trader out there, or you just use the Trade Finder plugin. What I do here, it doesn't really matter. Yeah, other things are absorption events, iceberg orders appearing at those price locations, exhaustion, like when you see massive speed and massive volume on those levels, and then the market tries to push down further, but it does so with a lot less volume. Then this is what we call exhaustion. And if the market then comes up again, we can see, okay, market sellers actually tried to get the price to break out through the level, but they just didn't manage. They just didn't have enough power to do so. And yeah, the fifth thing is obviously price action. So if I see a higher low, a higher high, then this is what finally shows me that the buyers have finally taken over here. So this is just those are just the 5 factors that I'm having a look at. Of course, every one of these 5 concepts is much deeper than what I just talked about, but I just want to give you a brief overview on what I'm actually looking at these levels. All right, let's go on. So what you can see here, market came down to the level, lots of active selling here, lots of teal colored volume bubbles. Then we see this bigger liquidity here at 51.80 was filled, and this is right where the first market buyers stepped in and immediately pushed the price a bit higher. And this happened right at our price location that we predefined here in our market analysis. What we can also see is the shift of this limit order in the book, in the bid, sorry. So what I personally like to see is some kind of rebalancing in the order book right after one of those big liquidities gets taken out. So what do I mean by that? As soon as the market fills this limit order here in the bid, and we see that active buyers are stepping in, what I like to see is that the bid is filled again, and that there are new orders appearing, new limit orders appearing in the bid right after this event. This shows me a very strong bullish sentiment. It didn't really happen here. I mean, we can see this order here down at 51.78 appearing, but this is not what I would eventually call rebalancing. But after the market has increased in price a bit, we can see this order appearing in the book, and this is what finally validates my trade entry. Another thing we can see is the imbalance in the book. Just have a simple look at the imbalance of the liquidity. We can see many orders here above the price in the ask and the offer, where on the other side here in the bid, it's mostly black. There is not much participating here beneath the price, but more so here above. So what we can actually assume here is that there is more interest in prices on actually higher prices. So this is a further argument that I use to actually validate my trade here. And as you can see, I entered with 2 contracts right after this order here appeared in the bid, and right after the market made this small pullback to this level. And as soon as I've seen new buyers step in here after this little pullback, I entered my long trade. So let's click on play and see how this situation turned out. Of course, what we usually want to see in these kinds of trades is a fast and effective follow through. So we don't want to see the market running around in sideways consolidation areas right after we enter this. If we want to trade a reversal, what we want to see is fast and effective follow through. If that doesn't happen, what I'm usually doing is I reduce my risk, because with every minute that passes where I don't see this kind of follow through, my chances of a winning trade are actually decreasing. So here everything went absolutely fine. We've seen buyers stepping in. We've seen the price running right into this liquidity cloud up here, filling the 51.9250. And after the market did so, I took out my first contract here. Should be a risk reward of 1.5, I would say, something around this. And with the second contract, my original plan was to trade up to the daily VWAP, which is the white line above here. So what we can see here is that this order in the ask got filled, and right in that moment we can see what we call flipping. Same order size appears here down at the bid. So this is a good point, it usually is, to actually reduce some risk. So what I would normally do is I take the stop and place it right beneath these kinds of orders, because they actually protect my trade. And yeah, what I don't want to see is this order getting filled and the market pushing lower from there. So actually it would have made sense to place the order right beneath the limit order, but obviously what I wanted to do here is go for a longer term trade, and that's where I probably have given the trade a bit more space. So what we can now see is, as soon as the price approached and came closer to this price of 51.90, the order got pulled completely. This is what we call spoofing. This order obviously was not real. So this was just to show the market some kind of false strength. And what we should do after something like this happens, after one of those orders gets pulled, or on the other hand gets stacked, what we should do is just have a look at how the market reacts. If the market pushes lower right after this happens, because someone says, hey, okay, you framed me, let's just push the market lower now because this wall was actually taken out, then I just want to leave my trade. Then my original trade idea is not longer active here. But if on the other side, if on the other hand the market reacts by increasing in price, I can actually take my stop order and place it right beneath this low. So what we can see here is market comes down to this level and immediately starts rising again, which is a good sign in the first place. But as we can see, the market has problems making new higher highs and instead comes back and back to this level. Now it actually ran into the 51.90, and we can see that part of the order actually came back into the market and got filled, and the price reacted by rising. So again, what I don't want to see is that the market now makes a lower low by falling beneath this level. So this is a perfect space to put the stop order now and just wait on whether my target gets filled or my stop got filled. There's nothing more that can happen to me now. The trade is going to be a winning trade either way. But of course, as soon as the market is above the 51.90, my trading idea is active. And I've still got all the chances to actually reach my final price target. So again, you can see how the market did not manage to make a higher high. And we finally got stopped out at this place. And we leave the trade with a $512.50 win. Okay, that's it for the trade of the day. I hope you could learn something. I hope it has some value for you. And again, if you've got any questions on what I'm showing you or just some general questions concerning Bookmap, please feel free to ask anytime. All right. So, next thing we're going to take a look at is a question that reached me. I'm just going to read it out to you. I watch your German streams and I understand a market analysis is important for the success of a private trader. Right, it is. However, I still don't know whether I should mark the lows or the highs in a volume profile. Can you give me some hints here? Absolutely. So I think there are only a few tools out there where we can see so many misconceptions about in YouTube videos and educational stuff, like the volume profile. So the volume profile obviously is a very powerful tool. It's not the holy grail of trading, but it's a very powerful tool that gives us a lot of objective information about market structure, about the auction process. And I personally like to use the volume profile to see it as one of many factors within my market analysis. I like to combine it with market profile levels too. But anyway, let me just jump over to Paint and talk about some very, very basic conception about volume profiling. So just imagine the markets, the futures markets, and basically every market that is traded over an exchange is some kind of bigger auction. And you can definitely compare this to the kind of auction that you know from the real world. Like if you go to Sotheby's and you just want to bid for a valuable painting, this is basically the same process that also happens in the world of trading. However, there's one big difference. While in a real world auction, we can only trade into one direction, we can only buy. In the world of trading, this auction goes into two directions. We can also obviously sell things. So the first and basic situation that we usually see is when prices are fair. And let's just stick with the example of the real world auction. Just imagine you've got some kind of object that is being advertised, and now the auctioneer starts to ask for some prices, and the auction usually starts with very low prices. And what you're seeing in the audience when the prices are low is a lot of bidding. Prices seem to be low, prices seem to be fair for everyone, and that's why many hands go up and actually many people want to buy here. So, as soon as prices increase a bit and go higher, you will see much less hands go up, and actually much less people are still willing to pay the price for the desired object. And this goes on, and the higher the price rises, the fewer people are actually willing to pay for it, until finally a price is reached that we call premium, where there's only one buyer left, and this is usually the one who gets the price. So in the world of trading, the same thing happens into the other direction. So as soon as the prices are fair and appreciated by both buyers and sellers, there are gonna be a lot of hands going up for selling. As soon as prices decrease, fewer people are willing to sell here. Until finally Same game goes on as before until finally a price is reached where no one really wants to sell anymore because prices are just simply too low for that. This is what we call a discount price. So, of course, on the other side, when we reach those discount prices, there are very few sellers that are still willing to sell their goods here. On the other hand, of course, these prices are actually really, really interesting for the buyers because this is where they can buy the stock or the future for the cheapest prices that the market actually can offer them right at the moment. On the other hand, this also counts for the premium prices. Here it's just too expensive for any more buyers to actually step into the markets, but of course those prices are really interesting for the sell side to actually get their stuff out to the people. So in this kind in the framework of this theory, a volume profile will certainly look like this. There's going to be the area where the price is supposed to be fair and where both buyers and sellers are willing actually to pay for this, to trade with each other. And as soon as prices go up, the volume will decrease. There's going to be less interest in the future or the stock, and this also goes for the downside. So the price where actually the most volume is traded, this is accepted as the most fair price of the market, and this is what we call the VPOC, the volume point of control. So now just imagine you're a private retail trader and you want to participate in the markets and you want to find a good spot where you can either buy cheap or sell expensive. Would you really like to participate in this kind of area where prices are fair and where both sellers and buyers are accepting the price and the price actually goes sideways? Is this the area or the price location where you actually want to participate and buy or sell, where the market is considered fair? Of course not. You want to buy when prices are in discount and you want to sell when prices are in premium. So it doesn't really make sense to actually mark all the VPOCs in your profile or POCs in your profile because this is usually where you don't want to trade. Also, I'm not really a fan of marking value area highs and value area lows because those are simply values that are automatically calculated by your trading software, by your charting software. Of course, they do have their value because many algorithms of institutional traders are reacting to those levels. However, it's not really where you want to trade. You want to just have a simple common sense look at this profile, and you just want to use it to find areas of premium and you want to find areas of discount. And this is usually on the edges of those value, let's just call them value hills or value mountains or whatever you want to call them. If you can see clear edges on the sides, both above the value area or below the value area, this is where you want to find your trading locations. Now, however, the important thing is that you just don't want to use them on their own. You always want to confirm them with different other factors like liquidity, like dealer hedging levels, whatever, like market profile levels. You want to see that there's actually interest in this area. I do not like to just simply use volume profile levels on their own. I always want to confirm them with different other factors, but that's just my personal style of making my market analysis. But I still hope that I was able to answer your question here. Okay, so let me just have a short look on whether there were any questions coming in now. No, there's nothing. So to everybody who just entered the webinar, please feel free to use the chat function of YouTube or Discord to ask your questions on anything that I'm showing you, either trading or, of course, the practical use of the Bookmap software. All right, let's just move on with the next step, and this is our short and brief market analysis of the ES future. This is what we just talked about. You can see the market profiles on the left side and the volume profiles on the right side. What I like to do is set my chart back to yesterday's session. I don't want to see what happened today already, just to start my analysis without any bias. Just some words. How much time the market has spent on certain price locations in a certain time frame, while the volume profile shows how much volume got accumulated on a certain price in a certain time frame. The blue profiles in the background are the higher time frame monthly profiles. The purple profiles are the weekly profiles, and the grayish white profiles in the foregrounds are the daily profiles. Okay, you can see here what I actually just talked about. You can see this value area here, and you can see how we've got a clear edge on the downside of this area. This is where our discount prices would be, and you can see this area of clear edges here on the upside of the value area, and this is where our premium prices of this value area would be. Okay, so just to make this clear again, we're starting off with the 5-minute candlestick chart. This is where I usually start. As I said in the beginning of the session, this is just a very brief and basic analysis of the markets. We're not diving too deep into those concepts because this would just be too much information for this kind of public sessions. However, the levels I'm going to show you are really simple concepts that everyone can use on a daily basis, and everyone should use on a daily basis, because those are just levels and price locations where you can find good trading opportunities day by day. First thing that you should always draw is the yesterday's high. Also important, at least for me personally, levels are never just simply some lines, because the market just does not tend to react on simple lines. Levels are always price locations where I want to find my trading opportunities. After the yesterday's high, we're of course also drawing the yesterday's low. I usually use a teal color for that. Then, of course, what you're seeing here is the complete electronic session of the future. So on the left side, this is the market between, I can only use the Middle European session times here, because that's what I'm used to. It goes from 12 a.m. to 3 p.m. where the US market opens. So this would be like 9:30 Eastern Standard Time here, where the actual cash session opens. What I also like to use as a level is the low of the cash session. This would be here. And one of the very special levels that I recommend every one of you to use and to backtest is the closing price of yesterday's VWAP, and I'm using the VWAP of the electronic session here. So I'm using the VWAP from the whole day session. And what you can also do is use the closing price of last week's VWAP. So this is a very interesting and a practical price location too. All right, then let's have a look at what we can also use here. One further level that I would like to mark is this, what we call single print area, or what we just called the premium price of this value area here. And down below we have the discount area. And also we can mark the discount prices of the before of the valid area, the valid value area, sorry, the valid value area before the breakout appeared. So this would be a price location where we can assume that sellers are gonna defend their prices as soon as market approaches there. So that's it. Some very basic levels, and we're just gonna set this back to the current price. I'm not connected to a live data service here, so this should be a bit delayed. But anyway, doesn't matter. So what we can see here, market opened above yesterday's high, which is a very valuable information already. It closed the gap right after the Asian session started off. Market came up to the level we've just drawn in, and just see how the market reacts to this level without us knowing that actually the market did so. We couldn't see anything of what the price did today when we've just drawn in those levels in our market analysis. Market was not able to actually pass this level, so it made a pullback to the yesterday low, pushed right through it, but then actually buyers stepped back in, pushed the market up again. We had this little pullback opportunity. Maybe this would have been a trading opportunity too. Market came back. It didn't manage to make a higher high. So basically we're still within this small and narrow channel here. But now let's jump right over to Bookmap to see what the market actually did after the opening. So what you can see here is my real analysis that I did in the morning session with my clients today. So here you can see that different levels have certain colors, like we have this negative gamma level from the SPY down at 5,100 points. We've got our yesterday's high, which we just also draw into our charts. But as you can see here, it's also validated by two other factors, which is a negative gamma SPY level and a negative gamma SPX level. And we also have the volume profile level. In this case, we've got it a bit higher than what we just painted in our chart and our market analysis, but we can see how the market reacted earlier today in the European session. And this is where we are right now. So first thing that everybody should have a look at before you start your trading session is the economic calendar. Do we have any news today that are valuable for us? Okay, every kind of news that actually has 3 stars. So, okay, sorry, I'm using the investing.com economic calendar here. You can use whatever calendar you'd like, but this is just what I'm used to. Whenever I see news with 3 stars that are related to the US dollar, this is what I take serious, and this is where I do not want to participate in a trade. No matter which market, which future I am trading, this is only crude oil inventories. It won't have that much of an effect on the ES future. However, I still don't want to trade anything during these times. So in 44 minutes should be around 10:30 for you guys, 10:30 Eastern Standard. This is where everybody should pay close attention. You can also see this in the Bookmap chart, even if you did not check out the economic calendar before. You will see that the chart suddenly turns black. All the market makers pull out their orders, take out their liquidity just 1 or 2 minutes before the news are actually stated. And as soon as the news appear, market will go wild and crazy. You know the game. And what I'm doing is I am waiting until the market maker liquidity actually comes back into the markets. The book gets filled again, market loses its volatility, gets stable again, and this is where I will take or even think about my next trades before I do anything. All right, so we've got 45 minutes until the next news are actually published, so we still got a lot of time to actually find some trading opportunities, at least if the market is doing something interesting, which it is certainly not at the moment. So let's just have a look at the most probable scenarios. First look that I am usually having is I'm zooming out of the chart, and without noticing my levels, we can just turn them off for a moment. By the way, if you're interested in that, I'm making this kind of market analysis each morning by drawing these levels from hand. This is nothing that's calculated, but I'm doing this kind of market analysis for many years now, and my levels show great reactions each day. And what we are currently working at is a kind of software that makes it possible for you guys to actually synchronize my levels. I'm pretty confident that we'll have this software finished around the middle of May. So next month, everybody should be able to actually synchronize my levels in case that's interesting for you. So let's just turn that off for now. No, that was the trade finder. Sorry. Okay. What I am having a look at is the imbalance of the liquidity. So just a brief and simple look on whether there are more limit orders beneath the price in the bid or above the price in the offer. And this is a thing that's usually quite easy to answer. As you can see, we've got many big orders here at 51.50. We've got a lot of liquidity around 51.40 to 51.42. We've got a huge order here at 51.35. So there's a lot of liquidity lying above the current price. And there are also some bigger orders beneath at 51.10 and at 5100. However, this is by far not as big as what lies in the book above the current price. So as you surely know, theory says the market wants to go where the liquidity lies, because this is where the auction can run as effective as possible. Just imagine you're a big institutional trader and you're placing a huge limit order. What is it here? It's 644 contracts at 51.35. And you're placing this order and it's there for many hours. It's there throughout the whole day, and even, it was placed here yesterday around 7 p.m. European time. So the thing is, if you're an institutional trader placing this kind of order, there usually is a reason to do so. You either want to spoof the market, but this is less common for orders that are placed further away from the current price and that are in the book for such a long time. Those kinds of orders are usually real. Of course, not all the time, but usually this is liquidity that is supposed to be filled. So the market obviously knows this. And if I would be a different market participant who actually knows that I will find liquidity there, what I'm trying to do is get the price up there to actually take use of this liquidity. So basic theory is where liquidity lies, the market wants to go. So if we've got a clear, visible imbalance in the book on the ask side, we can assume that prices are more likely to rise within the session, to increase within the session, than they are to decrease. Of course, this is not always the case. Market can show several price corrections until it finally gets there. So it's not just that we see an imbalance in the book and simply press the buy button and everything will work out as we've planned. This is not how trading works, unfortunately. But this is one of many factors that I'm having a look at before I actually start my trading session, so I can actually know, okay, I will have a bigger advantage on the buy side today because there's a clear imbalance in the offer, at least right now. Of course, what is also interesting is when we can see a shift in the book. Just imagine those orders above here would be cancelled suddenly and there's new liquidity coming in at the bid at the same time. This would be a very, very valuable information for us. And this is something that a common retail trader who only uses like candlestick charts or even footprint charts, which are also showing us a lot of valuable information. But even if we're just using footprint charts, this is something that we cannot see if we do not have some kind of order book. And what from my perspective makes Bookmap so valuable is that we can actually have all this historical order book data recorded. What I originally personally learned is just the trading from the depth of market, just using the classical order book, which you can see here on the right side. On the other hand, this is nothing that I would recommend you guys today because it just makes life so much harder just trading from the dome. It's something that you should practice, actually, that you can take a lot of advantage from if you know how to do it. However, having these kind of informations at hand and having them recorded and having them visible at each time is of so much value for every retail trader. Just imagine, I mean, you really have to focus when you're trading just from the dome, and just imagine there's some certain kind of order flow event taking place when you just had to go to the toilet for a minute or whatever. It's just happening right in that moment where you just didn't pay attention and something big has happened, some big shift in the book, and you just didn't pay attention at that moment. You would have simply missed it. If you're using Bookmap, everything is recorded and you can see it afterwards, and you can use this kind of information for your advantage. Every bigger order that gets stacked or pulled or moved in any way is a valuable information for us. Okay, let's have a look at the chart. This is what we call a open auction. If the market just opens and just runs sideways and doesn't really know what to do, this is what we call open auction. And this is where we just want to wait and basically do nothing. So what I would recommend you guys do is just wait for the initial balance to form. Initial balance is the first trading hour of the day. So we're just gonna have a wait until it is 10:30. We'll have the news then, we'll have the oil inventory news then, and we're just gonna wait until the news event is over. And usually, or in most cases, when we actually form a really narrow open auction at the beginning of a session, we can see a breakout of that range after the initial balance was formed, and we can see a bigger movement in the further day. So as soon as market just runs sideways, we just want to have a look at it and do not participate at all. We can see, maybe this is something that I can still tell you, we can see a lot of negative gamma below the price right now. So the yesterday's high, and that is something that I also discussed with my clients earlier in our market analysis session. The yesterday's high is a very, very important pivot today. As long as we're above yesterday's high, prices are in an area of mainly positive gamma where volatility is decreased by the market makers hedging requirements. Sorry, I'm just having a look at what the market is doing there. I personally, as a stock investor, I really want the prices to stay above yesterday's low, because if we actually have a breakout through this level, through the 5110, we're back into an area of mainly negative gamma, and this is what will increase volatility massively. First of all, the negative gamma acts as a kind of magnet to the price. So if the price manages to fall beneath the 5110, those negative gamma levels will actually pull the market towards them, because the dealers are actually forced to sell into the decreasing price movement, which obviously would be bad for us in case you're holding stocks and you want to see rising prices again. So I really do hope that the price can actually stay above the yesterday's high. If we fall, now this is from the perspective of an investor, of course. If the prices fall beneath the 5110 level, for us as day traders, what we want to do is we want to look for short trades. If we've got a wonderful reference order right here at the 5110, if it gets filled and if the price stabilizes beneath this level, then I will only try to find short trading opportunities during the day. What I'm going to do is I'm definitely going to wait for the news event, and then right afterwards I'm going to see in which direction the market has turned at this point. So beneath the 5110, what I'm trying to do is I'm going to try to trade the pullbacks to these negative gamma levels. So I want to trade the pullback short to the yesterday high. As soon as the 5100 is passed and the market broke through this level, I want to trade a pullback back to this level and short from here. As soon as 5092 got taken out, I want to trade the pullback to this level and short from here. This is in case the market passes the 5110, and as long as we're above this level, I tend to look for long opportunities. However, I don't want to trade within this narrow channel that the market is inside at the moment. I do want to see the break of the 5130. This would be a very good trading opportunity. As soon as the market manages to stabilize above this level, we have a lot of space to actually, you can see there's another negative gamma level above here, and this acts as a magnet too, but in this case in the other direction. So as soon as prices rise, market makers will have to buy, and we would have a very good trading opportunity coming from this volume profile level up to this negative gamma level above there. All right, guys, that's it for today. I'm gonna have to leave because I'm gonna have a client meeting in just a minute. So thank you for attending. I'm gonna see you guys in the next session, last Wednesday of the month. I hope you liked it. I hope you found some value in the session. And in case you got any questions, please use the comment section or write me an email to mail@sparring-academy.com. I'm gonna see you guys in the next session next month. Till then, have good trades, stay healthy, and see you next time. Bye-bye.